Okay, let's go ahead and take a look at the stock market technical analysis. We'll see what we got going on I want to look at oil. That looks interesting here at current levels. And then obviously interest rates, very critical today, and we want to look at that. So guys, drop me a thumbs up if you're finding some value in the content. Hopefully I'm able to at least give insight into the markets and additional trade ideas. If you're interested in the private member group and you want additional market insights, additional trade ideas, I think I put out 2 or 3 today in that private member group already, then feel free to join up, link in the description below. Triple Qs, we've got the biggest thing for me right now on Triple Qs. We've been in a period over the last 2 weeks of extremely low volume, like half-day volume, the kind of volume you see on half days or holiday trading, but it's, you know, taking place over the entire day. So very low volume. But the biggest thing on Triple Qs is this bearish engulfing right there. Okay, that bearish engulfing is a topping stick. As long as we don't get daily closes above there, then that's the top. That's how you treat them. You know, you look for them at the end of extended uptrends. We look for additional signs that's a top, such as divergence. All right, you can see the RSI starting to turn back down. PPO looks like it's gonna cross over and turn down. A little more work to do there, but in general, as of right now, these highs, when we popped over this range right here, and we're right up here, they're divergent highs. So until those divergent highs get taken out, then it's a very good likelihood that we're going to get sold into up at these current levels. And then what you do is you want to look for topping sticks or reversal candlesticks, and there it is right there, outside trading day, bearish engulfing candle. That indicates that is the top. All right, a daily close above there, and not just a couple pennies above there, but daily close, you know, maybe a 1% or so daily close above would negate that as a top. And if you're going to short this as a top, then you'd want to stop out on that kind of a daily close. So very simple trade. Risk reward is good. I mean, for where we're at right now, if you go up and let's say you've maybe got 1.5%, 2% loss or potential loss if you stop out, and then the gain, given that this is a new divergent high, I think your gain potential is pretty decent. I mean, bottom of the range could be all the way down here, about 5%. Equally, I think we could even go out and kind of go hit the 200-day moving average somewhere down around here, 10, 11% drop. So we're potentially looking at, you know, about a 1 to 10 or 1 to 5 risk reward ratio. So very good. Again, nothing guarantees it's going to work out, and you know where the stop is at. So that's that on Triple Qs. Most of this is all about NVIDIA. You look across the market over the last couple days, and really not much has been going on except for NVIDIA rallying. So we've got a one stock market, kind of a one stock market. Taking a breather a little bit today. I don't see any signs of a reversal here. I don't see any signs that a short exists. I mean, we are, you know, if you look back here, I can extend this divergence. If it turns down soon, it would confirm on the RSI. And here's the PPO, clearly divergent there. So we made a new high in price, but the momentum hasn't caught up yet. It's still lagging behind, and it does not show bullish momentum yet. So we'll see if that remains. The main thing is you have to kind of confirm these divergences by the RSI turning down, PPO turning down. We need to see those to say that we do have a divergent high. So little more work to be done there in NVIDIA. And the market's likely not going to roll over until NVIDIA does. So you definitely want to keep an eye on that one. Interest rates, you can see TLT. This is your long bond. Again, I talked about it. It's pretty, you know, it's pretty simple. You know, resistance, 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 resistance. Tested it for a few days, but resistance held, and rejection. So very likely going to go take out the lows of TLT. Drop down, take out those lows, and that means interest rates are rising. So if you look at TNX, I know this one's kind of sitting there. You know, it's almost recovered that little trend line. So TLT is really the chart to watch. TNX is the interest rates, but TLT is the bond. And so you really want to watch TLT to help you there. But you can see interest rates popping back up again, up almost 2%, not quite, but a good sized move in interest rates over the last few days. And that should continue to put pressure on interest rate sensitive stocks, tech, gold miners, home builders. So we will go ahead and look at the gold miners. Again, I talked about GDX in the private member group posted something saying we were at resistance and it was an objective short yesterday. I posted that towards the end of the day, but there it was. We were right there at resistance. And you can see support, 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 negative divergence starting to build here. So that's a divergent high, break support, back test, rejection. So it can continue to back test. But nothing says that it has to, and the probability says it's actually going lower. So I do think we're going to come down into this support range right in here, about 33 down to about 32.40 for the next move down in these miners. Down there, the buyers, there'll probably be some buyers stepping in on those. Home builders, all right, interest rate sensitive stocks such as home builders, XHB. I talked about this a bunch last week, and how it broke support. Again, there it is. There's your support line. You have an uptrend line there. You have negative divergence building for quite a while, and you have a break of support. That is a sell signal right there. Boom, break of support. More selling the following day, kind of held up for a few days, and down we go. So it's sell the rip. It's as simple as that. It's likely we're heading down to about 150. I see some support in there, and then likely get a bounce, but bounces will get sold into most likely. So I would, and you probably could even mark out some sort of a downtrend line like that. If I go down to the hourly, yeah, that looks pretty clean. You could tighten it up a little bit in general, right in there. So we are trending lower now on the home builders, and I think they have a ways to go. All right. Again, I think we're heading down here on 91.16 on the home builders. And so the individual stock that I'm in personally is this PHM. Continuing to, chart looks very similar. Uptrend line, starting to roll over, should continue down. Target on this one still remains this $99.50 to $100, right in there. And you'll probably tag the 200 at the same time. Okay, oil futures. Oil futures continue to be in an uptrend, and you can see here on CL, there's your uptrend line. So that looks decent to me. Actually had a little divergent low right here. You can see the momentum, how it went up there on the R side in the PPO, and yet dipped down and made it slightly lower low, divergent low. They bought that up, and we're holding bullish trend. So to me, it is a buy, a long, and then USO is the ETN. This one did have a little downtrend line, but I think there's support basically right in here. I think we're pretty close to support, maybe down to 76.30, but negligible. We're pretty much right in that area of support where I think the buyers are going to step in, and this thing will rally. So I like oil. DVN, this one, again, talked about this one for a while. This one, a bigger pattern, and I did point this out in the private member group. I'll go through this on the public channel. This has a big bullish falling wedge. All right, there it is. Big old bullish falling wedge. And you take the widest part of the wedge, which is basically about right there. Take it at the point of the breakout, which happened here, and that gives you the measured target. So the measured target is up in this area, and then usually you want to look for some sort of resistance lines. I think right there. We'll just say that's the measured target. It's about 64.70. Okay, so to me, this looks like an ABC move. All right, you've got the A leg higher, boom, B correction, and the C completion. Okay, and so that's what I've got on that one. To me, the correction I think is over. They're dropping it down 4% today, hitting this downward support line, the 200-day moving average. Good support right there. So in general, that looks like a buy zone to me. I added to the, so I bought back my position. I owned a little bit of it, and I added some more to it, looking for that next move higher up to that measured target. So that's a trade idea. Schwab, this one, again, hit support yesterday. Yeah, you can see decent support kind of in this area. Reaction there. There's a reaction low. Hit that reaction low. So bounce is probable right here. This thing's down in a matter of about a week. It's down 12%. So again, I think you get a bounce here up to, the major target of the move, I have it in red, which is the widest part of the wedge, which puts us down here. So I still think we're going lower, But again, I think it's a sell the rip stock. You don't just drop typically right to a major target. Usually you're going to work your way lower. So the bounce could, I'd see some resistance right in this area. It's about 73.01. Might make its way up to 74.60. That's about as far as I think this thing would go. But again, sell the rip from my opinion. So I want to reshort into resistance. And then looking at some of these other ones like JP Morgan, starting to break down. It's not doing a whole lot. Visa. Yeah, Visa looks like it's continuing to break down. We got a reaction low right in here, so we'll watch that level. You take that out, it should be a swift drop to the 200-day, which is not too far below. The 200-day from that level is down, 2%. So, yeah, I think you take that out, you drop right to the 200. Couple setups. Ulta, it's got earnings, it looks like, on Thursday, so definitely high risk to take a position ahead of earnings. I usually prefer to not do it. This one is set up in a bullish falling wedge right here, and you do have some bullish divergence, and you also have some decent horizontal support right in here. So, it could gap up on earnings. Could gap down, and then the buyers could step in, and that might be a bid. There's lots of possibilities, so typically I like to wait till after earnings to get a good read on it. But an example of kind of gapping up, here's Chewy. This one I think we covered in the live stream on Saturday, so feel free to join up on those. I typically try to do them every Saturday. I haven't been doing them for the last month, but usually do them around 12 Eastern, 9 o'clock Pacific. This one, you had big bullish divergence, building. So this was divergent lows. Here's your trend line resistance. It did break out actually right before earnings, and there's earnings, big, huge gap up. You don't want to chase that at this point, but it could obviously go higher. I see a big downtrend line way up here. Resistance. So I could easily see this thing working its way up to that trend line at this point. Wheat. So here's wheat. You can see we're holding an uptrend line, so there's nothing really broken with it. We've got the support. We do have a little bit of negative divergence on the daily starting to show up, just ever so slightly. And so, with that divergence, we might see a pullback, maybe a pullback, a correction. Two possible levels I believe we could pull back to. One is about 604-ish, kind of right in there. Decent. That was actually real. That's probably where you go to be honest. That I wouldn't see it going much beyond that. That was really strong resistance for quite a while. We broke out, so I could see a pullback to that level. Maybe down to the 200 at 577. I don't think we'd get down there, but those are the two levels I'd be watching for potential buy zones, because I think it's still buy the dip in this one, but it does potentially, with the divergences starting to show up, we could see a pullback on here. A pullback down to like $6 would be about a 5.5% drop. So that's potential. General Motors, GM, you can see this one has been a short for a while. We consolidated up here at resistance for quite a while, and then it gave it up, and it's just nonstop selling. From that resistance level down, it's about 8.5%. Coming into reaction lows right here. There's another reaction there, so maybe a little bounce here. And then more downside, most likely. NTR, this one, it looks like a decent long to me. You've got, I can see some reactions right around this 57.30 area. Little choppy, but in general, there's another one. There's some reactions. And we're basically at it now. The 200 days just below, so might want to run down and hit that. But in general, it looks like we're kind of at support. And this is where you'd want to potentially buy it. Maybe down from here down to the 200. I don't think I'd want to be buying it or going long below the 200. If it continues to drop from there, I'd be looking for areas to exit the position. But looks like a zone to be buying this at for the next leg higher. Because remember, this one had a decent bearish rising or bullish falling wedge. And then, so you take the widest part of the wedge here to give you kind of the measured target. Take it at the point of the breakout. That just sets us up anywhere from up here all the way to about here. So we haven't hit that major target. And so minimum major target would be about 69.20 or so. And so, yeah, I think there's some more upside. I think we're about to push back up. Okay, been kind of scanning around. Don't see much else, so I'm going to leave it here. Please drop me a thumbs up on your way out, and I'll catch you guys on the next one.